Right, what is going on, everybody? Hope you guys are having the best of your entire life. Today I made about 4,500 bucks from day trading. Literally took like this one trade was like about 5 minutes. So if the title says how I made 4,500 in 5 minutes, this is what it means. All right. So now, anyway, quickly talking about what trade it was. It was SPY, and it went 110% in about probably 6-7 minutes, which is insane. I know, but I'm going to break this trade down for you. I'm going to break down the strategies. I'm going to break down what helped me put my position size that I did on the trade, and what made me comfortable taking this trade, and all sort of stuff. Now you might be like, but bro, it's easier for you because you got a $45,000 account, a $40,000 account. Yeah, whatever you want to say. I'm talking about 110% return. I just want you to focus on 110% or even 100%, for example. That means if you put $1,000 into a trade, the 1,000 became 2,000 and profit 1,000. That's what it is. If you put 200 bucks, you made 200 bucks. Beautiful, right? I know. Let's break this trade down. I got a few points written down in front of me, the stuff that I'm gonna break down. And actually, matter of fact, I took 2 trades. All right. First was SPY, second was Tesla, and but SPY made me most amount of money. So let's talk about SPY. Now, this is SPY in the pre-market. Okay, I'll break down really quick the pre-market action, and as I said, I got 4 points here. As soon as we're done, we're done. Okay, so it might be long video, might be shorter video, whatever it is. So in the pre-market, I saw like if you ignore this particular candle, 8 a.m. candle, now I can go and show you really deep what actually happened. So this wick right here that you see, let's go on a 1 second chart. I do not trade on a 1 second chart. Okay, just know that. See this? This is just one wick on 1 second. Boom, boom. So you can pretty much ignore this wick. It's not even meant to be there. It's just one order that got filled pretty much, at the bottom. That's all. Otherwise, no, you can ignore this wick. So I was ignoring this wick, and I had this kind of trend line drawn apart. So I had this trend line running on, right? Now, I was like, oh my God, this looks really good. The trend line's about to break, and the trend line was breaking right before the market opened, 9:20 and 9:30 when the market opens. And I'm like, oh my God, this looks nice. Now, what's the meaning of trend line? Trend line is just like, think of a trend line as a, freshly frozen lake. When you freshly frozen lake, you bounce on the lake over and over again. What happens? You eventually break through. That's exactly what it is. It's bouncing on it over and over again. If it breaks through, you're going to make a nice move down. Now, that was my first reasoning for this trade. I was watching this trend line and the pre-market. A lot of people ignore the pre-market action. Like they're like, oh, pre-market's not important. I mean, who said what's important and what's not important? Pre-market helps me make money, so it's important for me. I use it to make money. And if you can use it to make money, why wouldn't you watch it? This is my question. Why wouldn't you pay attention to pre-market action if it helps you make money? I mean, unless you're a billionaire, you don't care about money, don't worry about it. So if you're not, just shut up and watch pre-market actions. All right. So I was watching pre-market, as I said, and this was one of the reasons why I took this puts play. And this is one. Second one was the very important reason, which is why I'm actually on a 2-minute chart, which is a time frame. Right? Why 2-minute chart? So really quickly breaking down the time frames that I use. A lot of people make this one big mistake where they are watching one time frame whole day. I mean, it just doesn't make sense. When the market opens, there's not enough data for you to watch 5-minute chart, like first half an hour. There's not enough data. So I don't watch 5-minute chart because, I'm going to wait there for 5 minutes for a candle, one candle? What? I want a candle quick because there's not enough data. That's why I watch 2-minute chart, literally. Write this down. From 9:30 Eastern time to 10 a.m. Eastern time, I watch 2-minute chart. Okay, just 2 minutes. Then 10 a.m. Eastern time or New York time, 11 a.m. I watch 5-minute chart. And then 11 a.m. to onwards, I watch 10-minute chart. This is my way of trading. I trade using this. There has to be different time frame. Anybody who tells me, oh, I only trade on one time frame, I'm always like, oh, you don't know what you're doing, do you? The only reason why I say that is you can't watch 1 minute, like one time frame whole day. It just doesn't work. You need a system. I have a system behind this whole thing. I know why I watch 2 minute chart. I know why I watch 5 minute chart. I know why I watch 10 minute chart. There's a system. And what's the difference between a strategy and a system? Strategy tells you where to enter, where to exit, where to take profit. System tells you everything other than this, including the strategy. System tells you the pre-market action. System tells you what option contract to choose, when to sell, when to buy, like when you are in a position, if you need to buy more, when to sell a little bit and then buy a little bit later again. I think there's about, last time when I checked, I think there's like 10 or 12 things that go in a system that makes a system the system. Like then rolling your contract. There's so many things. So this is a part of system. Time frames is a part of system for me. All right. Levels, trends, patience candles. There's so much stuff that goes in a system. Now this is clear. We have cleared out the time frames. We have cleared out the pre-market action. All right. Now talking about the system a little bit in one step further, which is option contracts. All right. Now SPY has 0 days to expiration. 0 DTE, they say 0 days to expiration on SPY. They do 0 days to expiration every single day. And do you trade 0 days to expiration? Should you trade 0 days to expiration? I have one simple rule. As I said, a system. In my system, from 9:30 New York time to 10:15 New York time, first 45 minutes, I trade 0 days to expiration on SPY cues, right? Then 10:15 onwards, I trade 1 day to expiration, which is next day expiration. Now, this works for me. Please don't be in the comments be like, oh, but bro, this is not the right way to trade. You know, you can't be trading 0 day to. I make more money. All right. So if you do not make more money than me, or if you didn't make $4,500 today, I really, really, really don't care if you start hating. I'll give you a little context. Some dude threw me a message because I made a video on Instagram talking about how I trade 0 days to expiration. He's like, bro, this is a wrong way to trade. I'm like, okay, how much money do you make a year from trading? He's like, I'm still learning. I'm like, so why not stay open-minded? Why do you have such a harsh opinion? Why do you have such a strong opinion about this doesn't work? I make more money than you. Why don't you just listen? I listen to people who make more money than me. I'm like, okay, how? Show me. Tell me. They got more experience. That's why they make more money. It's just always mind baffling. So now we got that out of the way. 0 days to expiration. First 45 minutes. Trade 0 DTE. Now, if you're about to take a trade at 10:13, right, in 2 minutes time, 0 days to expiration, you can't take it anymore. What do? I still take 0 days to expiration. Any trade that I open after 10:15, gonna be next day. But otherwise, it's 0 days to expiration. All right. That's the third point that I had for you was the option contracts. Because I chose 0 days to expiration on this particular trade because it was right at the market open within this time frame. All right. So we spoke about pre-market action. We spoke about the time frames that I use. We spoke about the option contracts. Now let's talk about the price action. What actually happened? Now I'm a sort of trader. I do not jump the gun. All right. Just because the market opened, it dumped. Now I'm not one of those people who are gonna be like, oh my god, this is it. I'm gonna jump in straight away. Because I've seen this happen. You will jump in, literally. I've seen so many people do this. They will jump in puts here, and then the market bounces. And then they take a loss, and the market dumps. They're like, oh my god, I just took a loss. Let me jump in again. It bounces again. And over again up until you blow up the trading account. Alright, so I rather wait for, I'll let the big move happen, then I wait for a pullback. When the pullback happens, that's when I execute. You see what I'm saying? So now I'm waiting for a pullback. I'm like, alright. I got the next candle pullback. I'm like, oh my god, this looks nice. This looks nice. Now there's a thing called confluence. So confluence is simple, very, very simple. Confluence simply means when you have more than one reason to take a trade. Okay, more than one reason to jump into a trade. So the first bit of confluence here is, what do you think it is? The trend line, right? The second bit of the confluence here is a break below the trend line, break below the pre-market low. You're kind of retesting this pre-market low right now. And the volume on this green candles significantly smaller. Sweet. I'm watching this. I'm like, all right, I like this. So there's a lot of reasons already for me to jump into a trade. But again, I do not jump the gun. I'm waiting. I'm chilling. I'm like, yeah, no problem, man. I'm chilling. We decided to move. I'm not in yet. Now, why didn't I enter? I didn't enter because we didn't break the low of the day fully. I was watching the low of the day. I'm like, if low of the day can break, that it's a confirmation for me. I put my stop loss above this green candle. My profit target can be my next level that I have based on our hourly chart. This looks good. That's like a $1 move. I'm like, this looks good. Low of the day didn't break. Yeah, you might be like, but bro, it did break. No, for me, for a level to break, it has to break below the bids and asks, with the bids and asks. Now, how do you see the bids and asks? These numbers right here. You see this when I'm watching this. This is the bids, this is the ask. Like, oh my god, what are the settings? These are the settings. All right, really quickly pause the video. These are the settings that I have. Do exact same settings, you'll see it. All right, these are the settings that I have. All right, do these exact settings, you'll be good. Sweet. And this number needs to break for literally a stock to, and you will avoid so many crappy trades because of this. If you're watching this 533.4 level, let's say, you want this bids and asks both below the critical level. If you're watching something towards the upside, let's say above 534.4, you want bids and asks above their level. Oh my god, this is literally, I'm giving it for free, man. This is gonna save you so much money from the false breakouts. You know, when a stock really quickly dips through and goes back and you jump in here. Nah, if you wait for the bids and asks to get below, you'll be good. Alright, so I didn't jump in. I'm like, alright, sweet, no problem. Now we started pulling back a little bit. Now I'm like, oh my goodness, it might be just setting up a little flag pattern right here. I'm still watching. I haven't entered yet. Again, the bids didn't break, so I never entered. As I said, the bids and asks need to break. I never ever jumped in. Now this is the level that I'm watching. Now what do you see here? A lot of buying happening at this stage. Now what happens when, as I said, freshly frozen lake? We are bouncing on the lake over and over again. There's gonna be a time when we just break through, right? And I'm still watching it. I'm like, yeah, no problem. I'm still patiently waiting. Matter of fact, it still didn't break the bids and asks. I was like, oh my god, this is pissing me off at this stage, because I'm like, oh, now, and then this is where it broke. I jumped in. Like, what's the risk? For me personally, not gonna lie, the risk was super contained. You know the risk that I had? Alright, let me show you the risk that I had. So I'm jumping in, break out of this particular candle. The stop loss is just like roughly around here. Profit targets here. Now think about this. I'm risking 20 cents to make 85 cents, right? I'm like, okay, this looks really good. So I jumped in a little bit heavy because my risk is so small. I jumped in a little bit heavy. Now, what does that mean? If you're risking this much, and overall you can take this big of a risk on a trade, but this particular trade, one contract might risk this much, so why wouldn't you just fill it up with all these contracts? That's what I did. I filled it up. I bought big position size. When I say
It's
big
3 o'clock.
position, wasn't a lot of position size. Like, I think it was worth $4,000 position size, and I made 4,000 on top. But if 4,000 is a lot for you, it's just because I've been day trading for a while and I've made a lot of money from trading. Anyway, so now I'm in the trade. This is what happened. It dumped. Wait, it really dumped. This is the first profit target that we had. Then the second profit target that we had was, I think it was roughly around this 532-ish, 532.2-ish level or whatever it was. Basically, it was like 110%. I'm like, oh my god, this is so good. Take some profits, guys. This is insane move. Take some profits. And when I say everybody in my chat printed, man, I mean it. All right. Like, I'll really quickly just show you one quick action. Right. Look at this. SPY puts $1,000, 5%. SPY 800. I can keep going. There's everybody just printed. I can keep going, but you get the point, right? Now, these are all my students, by the way, and they started trading, and they all printed money at this stage. But yeah, insane, right? Anyway, so this is all done, and we took this trade. Now I'm holding my runners, which is the fifth point that I had for you, which is a bonus point that I wanted to add, which is called negative risk management. Now, what is negative risk management? You have heard about risk management, right? What is negative risk management? Negative risk management is just so simple, yet not a lot of people use it. and it's always mind baffling to me. Where I'm like, bro, this is how you make money. Why not? Why won't you use it? You see what I'm saying? So negative risk management is simple. Negative risk management takes place when we are in a play. Okay, so what a lot of people do is, let's say if I had, for example, let's say if I had 100 contracts or 10 contracts, much easier for the calculations. If I took little profits here, right? So after my first profit taking, all right, so let's say first profit taking always is like 50% of my position off. This is what I do. After my first profit taking, 50% position off, which is 50 contracts are off. And if my original entry was $1.10, okay, that's how much I paid for the contract, 110 or $1.10 for the option contract. And I took 50% off. That means 50 contracts were off. I took them off at 140. That means I made $30 a contract on 50 contracts. All right, this is good. This is in my pocket already. But the remainder of the 50 contracts, I will let them run unless, of course, it makes a big move and I'll keep taking a little bit profits. But the stop loss for this is a break even. I mean, I do not lose any, just in case if it bounced. I don't lose any money that's already in my pocket. I get out at the break even of the option contract. So I can really let it run and it can go to $10. Let's say it goes to $10. I made a lot of money. But if it bounces up, you don't lose anything. Would you not take this risk to reward? You risk zero to potentially make whatever. I would take this every single day, and which is why I always say never, ever, ever, ever do one contract, because you can't manage your position like this. Always do 2 or more. You see what I'm saying? Take some off, the remainder can be break even. It only needs to work once because there's no risk. Only needs to work once and you'll make boatloads of money. This term is called negative risk management. Once you have taken some profits off of your contracts, off your trade, never let a green trade turn to red trade. That's my rule. Never, ever, like Nipsey Hussle says, all money in, no money out. All money in, no money out. Never let a green trade turn to red. Money's in, it's not going out. Nope. So I'll run out the break even. No problem. But that's it. This is my rule. And what happened here? This is what roughly happened. Started bouncing, break even hit on the remainder of the contracts that I had. Sweet. I jumped out. Done. Profit booked. You know what I'm saying? Does it make sense? These were the 4 points. I'm sure you picked up a few things from this video. I'm sure you learned a few things. Please let me know in the comments down below, because it's been a while I haven't uploaded a video, because I don't know why. I thought maybe not a lot of people like watching those videos. Just let me know in the comments down below if you enjoy these videos and if you want me to make more of these videos. And you know, it only takes me about 20 minutes to make a video, 2 minutes to edit, because there's no hardly any edits, and then upload. Let me know in the comments. I appreciate it. I'll see you soon. Peace. And hey, subscribe to the channel. Do your thing. Yeah. Alright, peace. Goodbye.